Welcome once again. Okay, we are proceeding with the question from the Mpumalanga question paper for June 2023. Now we are looking at question number 2.2.2. Calculate the following in the cash flow statement: the new asset purchased during the year, the price at which the new shares were issued on the 1st of February 2023. Okay, so I'm going to start by doing the calculation for the asset that was purchased. I usually do prefer to do the T account. I'll do the T account and I'll also show you how you're supposed to calculate it without the T account. Okay, so the information that we are given. Okay, let's move on to information B. Okay, information F is the one that has got information. That's where we've got the information for the fixed assets. The company owns a delivery van which was bought on the 1st of March 2019 for 335,000. Okay, on the 1st of September 2022, Kula Limited decided to sell the delivery van at the book value. Okay, on the 1st of March 2022, the accumulated depreciation amounted to 163,480. Depreciation is calculated at 20% on the carrying value. On the 1st of February 2023, a new van was purchased. This is the van that we want to find out at what price was this purchased. And then the depreciation for the month for the new asset was 3,000. So this is all the information that we need to do the calculation of the fixed asset that was purchased. I'll do the calculation using a T account, for I believe that actually when we use a T account, it's much easier for you to understand what is happening. Okay, our asset is the vehicles. I'm going to open a vehicles account. Vehicles. Okay. All right. When you are doing the calculation of the fixed asset purchased, okay, the first thing that you need to do is to identify the opening and the closing balances. Okay, fine. So if we go back to our information on B, we are given, okay, the vehicles at the beginning, the cost price is 335,000. But in order for us to do this vehicles account effectively, we need to record all the amounts at book value or at the carrying value. It becomes much easier like that. Okay, so we need the carrying value at the beginning and also the carrying value at the end, or the book value at the beginning, the book value at the end. Even the asset that was sold, we also recorded at its book value in this vehicles account, and then I'm sure we are going to get our fixed asset purchased. Okay, all right, so the amount at the beginning, we are going to start by balance brought down. Okay, remember I said I want the book value or the carrying value. We have got 335,000, and then they said, yeah, okay, fine. The accumulated depreciation amounted to 163,480 at the beginning of the year. Okay, so I'm going to say minus 163,480. Okay, it will give me something like 171,520. Okay, remember this amount is at its carrying value. Okay, 171,508. Okay, also the easiest way is also to record your balance at the end. The balance at the end is not on the question paper, but it is given in the answer book. In the answer book, they've given us the closing balance is 177,000. 177,000. Okay, so we have recorded our balances. What is left? Remember, this is an asset account. It increases this side and decreases this side. Anything that is going to increase this account is going to appear here. So it means, in other words, the fixed asset that was purchased is going to appear here. Why? Because assets increase on the debit side. What is it that we record on the credit side? All the items that decrease the asset account or the vehicles account. Here we are told that a vehicle was sold. So we have got an asset disposal here. Asset disposal. And remember what I said, we are going to record at its carrying value. Okay, we want to know after all the accumulated depreciation, how much was the carrying value at the time that the asset was sold. Okay, we know that at the beginning the asset is 335,000. Okay, we are going to say minus the accumulated depreciation at the beginning, 163,480, 163,480, plus the depreciation for the current year, which we are supposed to calculate. Let's look at the time. What is the date on which the asset was sold? On the 1st of September 2022, Kula Limited decided to sell a delivery van at the book value. So the asset that was sold on 1 September 2022. Okay, let's calculate the depreciation for the asset that was sold. The cost price for the asset that was sold, remember I'm saying that is 335,000. We are using the diminishing balance method, which is this one is the cost minus accumulated depreciation will give us the carrying value. Let's find the carrying value first. Minus 168,000, 163,480. Okay, and then which will give us the amount that we have already calculated there, 171,520. Okay, 171,520 times 20%, which is the depreciation rate, times the number of months from 1 March to 1 September. There are 6 months. Okay, that way there. Okay, which is times 6 months, which will give us an amount of 17,152. Okay, that is our depreciation. This amount is a part of the depreciation for the asset that was sold. So here we say plus 17,152. Okay, so this is the total accumulated depreciation. Okay, so when we say 335,000 minus 163,480 plus 17,152, we are going to remain with something like, let me see on my calculator, 154,368. Okay, so this is the carrying value or the book value of the asset that was sold on the day that it was actually sold. Okay, what else do we record on the credit side? Depreciation. Okay, let's also record the depreciation. Remember, the depreciation for the asset that was sold, it is 17,152, and then plus the depreciation for the new asset, which is given here at 3,000. So we are going to say plus 3,000. Okay, which will give us something like 20,152. I hope we're still together there. Okay, remember, what are we trying to calculate? What do we want to calculate in this asset account? We want to find the vehicle that was purchased. Okay, so automatically it means that the credit side will be bigger than the debit side, because our closing balance or our balancing figure is supposed to come this side. Okay, remember we want the purchased, or which becomes our bank here. Okay, remember we're doing cash flow. Okay, we want to find out how much money was spent on the fixed asset that was purchased. Okay, so we are going to get it on this side. Okay, fine. Now let's add everything that is on the credit side. When we add everything that is on the credit side, we are going to remain with 351. We are going to get 351,520, which you record in both sides. 351,520. 351,520 minus 171,520. We are going to get 180,000. 180,000, which is the amount that we are looking for. Is it the purchase? Is it the outflow? The money that was spent on the fixed asset that was purchased is 180,000. So the other method that you can also use anyway, but anyway, according to the answer book that is given, the answer book that was given, the first thing that you were supposed to calculate was the book value. The book value is this one that I've calculated. You were simply supposed to say 335,000 minus the accumulated depreciation. You get the carrying value here. Okay, that was the first thing that you were supposed to do. And then the second thing was which you were supposed to do, the additions is the balancing figure. You were now supposed to look at the disposals. You were supposed to do it like this. The asset disposal, you were simply supposed to say 335,000 minus 163,000 plus 17,152, which will give you 154,368. Okay, the depreciation also, how it was calculated, how we got the 17,152, I have already shown you here. Okay, here the total depreciation, you are also supposed to say the depreciation of the asset that was sold plus the depreciation of the new asset which was purchased. Okay, that is all using a T account. And then the other way that you are normally required to use when you're doing the cash flow statement is to say, okay, you can start by saying the balance at the end. It's more or less like you are adding everything on this side, you subtract everything on this side. So it would be like you open a bracket, you say 177,000, and then you say 177,000 plus 20,152 for the depreciation plus the asset disposal, 154,368 minus the balance at the beginning, 171,520. Okay, this would also give you 180,000. Okay, I hope you have fully understood my calculations. Please do not forget to like this video. Okay, if ever you have got anything that you want to say, you can always go to the comment section and write something. Okay, thank you.